All right, guys, welcome back to another episode of the Art Crypto Talk Show. It's me and Sahil here, and I'll be honest, this might be one of the most unpredictable moments we've had in months. You've got an Israel-Iran war 2 weeks in, the headlines flying every day, oil prices, shooting up all over the place. I guess it hit around $77, $78 right now, and but let's be real, everyone's watching the Strait of Hormuz. If that goes sideways, oil's not staying in the 70s or 80s. It's heading straight for the $100, maybe $120, who knows. And with that, the inflation risk comes roaring back. Meanwhile, the stocks also dip, the crypto is also down. Bitcoin is sitting at around 103K. Ethereum hasn't moved, 2400 it is. And there was no rate cuts in June, but the market is leaning into September being the first move. So today, me and Sahil are going to break all of this down. So let's jump in. So first thing I want to throw to you is, do you think people are, underpricing this oil risk? Because to me, one wrong headline and this could actually flip the whole market.
Yes, I agree with you here because I think the financial markets, like the traditional markets and the crypto market, we've always been very technology centered mostly, and especially the crypto market. Even when we are uh, bound to the traditional markets, it's usually the Microsoft and Nvidia and Facebooks of the world that we are aligned with. But this is much bigger than that, as you mentioned. If the Strait of Hormuz is stopped, or there's an issue there that Iran could bring about, that would cause a major inflation rise in the countries that have their oil ships going from that place. And it is not just about oil, then it is about more or less every commodity, because if oil prices go up, that means the price of transportation goes up, and if the price of transportation goes up, that means anything, if even from a matchstick to a Mercedes, everything goes up, right? And are people ready for such an inflation shock? I don't know, and I'm not sure if people are understanding how tense this situation can get economically.
That's true. I mean, when I guess the war started back around 12th June, and that very day itself, the oil prices shot up, I guess, $72, $74. So uh, let's get back to this. Let's get back to the basics. At this time, like you mentioned, the Strait of Hormuz, which carries 20% of the world's oil, it has never been fully shut before. But we've already, like you mentioned, we've seen 25-24% jumps in shipping rates this month. And if that thing gets blocked, the entire globe would be facing that. So let's get back into a bit of the geography lesson, and to the people who are not aware about how does that work, like what is the Strait of Hormuz, and how does how does the oil price go up because of that, and what happens to the world if the oil prices go up. So if you could just explain it a bit, I'll just add the image here so people are much aware about what exactly happens here.
Sure. So as we can see, this geography lesson by India Today's Image, courtesy. So so as we know, the Middle East is the largest provider of oil across the world, right? We do have other providers as well, but it is mainly it's Saudi Arabia, it's Iran and Iraq and all these countries who were providing the oil across the globe. And the Strait of Hormuz, as we can see, uh, it's a passage that lies between the Persian Gulf and the Arabian Sea. And the Persian Gulf, obviously, mainly controlled by Persia, which now is modern day Iran. And even in the map, we can clearly see it's either UAE or Iran, which has mostly the control of the Strait of Hormuz, because they are the ones that usually sell the oil, the 20% oil that we're talking about that travels through the Strait of Hormuz. It's mainly Iran and UAE and Saudi Arabia that sell that oil. So if Iran wants to destabilize the global economy, which they might want to do if this keeps on escalating, they just need to blockade ships from the Strait of Hormuz. If they feel that the international community is not doing enough to support them in this war, they'll just blockade it. And as you said, 20% of world's oil, that means at least 20% of the countries, right? And Those are not small countries; they are the huge countries. Even India, we buy our oil from Saudi Arabia mainly, but it travels through the Strait of Hormuz. So if the price goes up because of because then I think it's the Cape of Good Hope. If is the alternate route, I'm not sure, but I think it is, which will cause the ships to have a huge detour, and because it is a detour and we are taking longer travel times and longer travel durations, the price of oil will go up in countries like India or wherever these countries sell oil, and then it will be domino effect. India will face inflation because of oil prices going up, and whatever India sells to other countries, that will be sold at a higher price because again we need to uh, make our balance books right, and then the next country will do the same to the next country, and this is how I think the domino effect will take place if the strait gets blocked. That is, I hope it does not, and it does not come to that, but that is in layman terms how inflation will be triggered if this happens.
Yeah, I mean, exactly that. And they don't even actually have to block it. But, talking about blocking it also impacts a lot. Because if you look at the 1991 Gulf War, the oil spiked hard back then, the 2003 Iraq War, and, the Arab Spring, oil hit nearly $127 that time around. And like we mentioned, that 20% of the oil in the world moves through that choke point, right? And that's about 20 million barrels a day. And anything happens there, military tension, blockades, missile strikes. And now, when the US was actually, trying to actually jump into the war, that could have been disastrous for the entire globe. So, yes, that's how it happens. And when the oil prices shoot up, it's not about, paying more at the gas station for something like that. The transportation gets affected, the trucks, the planes, the ships all run on fuel, right? So shipping costs go up, food, because, food gets trucked everywhere, and higher transport cost means higher food prices as well, and everything. So basically, it's kind of blood in the human body, the oil. So if we say like oil spikes up to $120, it makes inflation even worse, and higher fuel costs feed into everything, like I mentioned. So I feel, coming back to the second topic, the rate cuts, if the oil goes up, I feel the rate cuts get delayed even further because the Fed does not want to look like, it's easing while the prices are surging. So for me, I feel this is the one wild card that could actually shift everything, right? So yeah, like talking about rate cuts, and everyone was expecting like there won't be any rate cuts in June. So how do you think, how much are the rate cuts necessary? How much is the easing necessary for crypto in general, and more and more the altcoins, which are actually bleeding at this point?
So yeah, you bring up a good point, and I think these two right now are very closely related. Had there been no war in the Middle East, I think we'd have been in a much better position. We were moving towards a much better position, in my opinion. But because of the war, there are people who say, and I think it has been proven as well. So whenever there is war, gold prices shoot up. Right, we know that everyone wants to accumulate gold when there's a black swan event. But this time, what has happened is, at least till yesterday, what had happened is Bitcoin had shown immense strength, and it had, I think it's 45 days or something of that sort, that we have not fallen below 100K. That is
Okay.
huge, right? Given the macro conditions all across the globe, that is huge. So is Bitcoin now a hedge against this? I don't know. Maybe not. But coming back to the rate cuts, as you say, uh, that also has a correlation with this, because if we are thinking of Bitcoin as an asset that is a hedge to inflation, then it doesn't matter, does it? In fact, it's better. Gold only goes up when there's fear all around. And if Bitcoin gets into that category, and in fact, it will beat gold in that category, because Bitcoin, I think, has the promise during the fear phase as well and during the greed phase as well, right? But I don't think that is the case as of now, because there are institutions and there are governments involved. We are in a much better position than before. But there was an ex post that I was seeing today, which literally said this, that if a trillion asset that we all admire, we all have an entire industry around, is dependent on what the US uh, government's arm is going to say in the next month, then we are still in a fragile zone. And when it comes to uh, whether rate cuts will be delayed or not, I think there's been a lot of criticism going around because of this. Because earlier, many countries did that. I think Switzerland did that. I'm not sure which other countries, but many of the countries eased up on this, but the US did not. And I think if this war continues, they just cannot. They just cannot. Right? Can they take this chance? Because if they do, then it'll be a chain reaction. And again, we know Donald Trump to be a dynamic president, but even he'll understand that at this point of time, the actions that are happening in the Middle East are going to govern a lot of things economically as well. And just criticizing Jerome Powell will not do anything.
I mean, that's true. That's pretty true. But like the ex comment you mentioned, like that person was actually pretty concerned about U.S. Rate cuts, and does that uh, affect the markets? It definitely does. And but is that the only thing that should affect the market? Ideally not, but that's how it has been happening for the past few years. Like if you go back to the COVID crash, the crash happened and then the all-time highs because after 29K, after it reached 29K, it was just after a few months, Fed cut rates. And even in 2022 uh, Ukraine war, there was an initial pop, but it kind of faded as the Fed tightened. So at the end of the day, the whole market right now is kind of hanging on the Fed, and there was no rate cuts in June, you know, and that was pretty much expected. But now like I read somewhere like we have got around 70% odds for a September cut, right, and zero chance of hike, obviously. And like you mentioned, the other countries, including Europe and whatnot, everyone has uh, eased up. It's just the US who are about to, or maybe in a few months, let's see if the CPI and the labor data actually come in soft over the next 2 months. I think September cut probably happens, but then again, you everything like last night I read Donald Trump actually asked for 2 weeks of time. Like he'll be, if he'll be joining Israel in the war, he'll be telling that in 2 weeks. I don't think so. It actually falls, it aligns with his policy of America first, right? He always said that he won't be participating in any other country's war, and now, especially the Middle East war, is something I don't think so they should get involved with. And I'm sure he has a few people who actually suggest him few things, because if it would have been up to him, I don't know what would have happened after that. So yeah, I mean, at this point, I think so. The next 6 to 8 weeks are going to be very data driven, and until the Fed pivots, you won't see the real risk on rotation yet. And I feel the alts will continue to bleed. And yeah, that's something I feel, because talking about altcoins, what is your impression on altcoins at this point, because they have been bleeding for a long while.
I think we talked about it off camera, and I will stand by that opinion. We are in a bear market right now. And as they say, we just don't realize it because of Bitcoin's absolute dominance and how much it has taken over traditional finance, in fact, with the ETFs, with the Bitcoin Reserve and all the regulations, all the rules, and even stable coins to an extent. We're talking about the Genius Act that is probably going to become a law, bill, whatever they call it, in the next couple of months. So, because of good regulations, because of a much better time to be in the crypto industry, Bitcoin has shown strength. It is uh, where it is right now in the 2 trillion zone, and the entire total market cap as well is, I think, around the 3.2, 3.3 trillion uh, zone. But if you look at the altcoins, just altcoins, and I was seeing this stat yesterday, uh, others outside the top 10 crypto projects, that is, others is at an at a 4-year low in terms of dominance, in terms of percentage share of the market cap. The share of the projects outside the top 10 that is at a 4-year low. And not just that, the current market cap of others is equivalent to the market cap of others that was in August 2021. So that means we are at a if we still treat a 4-year cycle, which I don't, if you include Bitcoin. If you include Bitcoin, I don't think there is a 4-year cycle. If we exclude Bitcoin, I think we have a pattern similar to the 4-year cycle, and we are very close to the bottom of it, given the numbers. Will we go even more? I don't know. And there is a strong possibility that we will, because as you said, Fed cuts delayed, and if the war goes on, it will be very difficult to justify a cut, which I hope it does not, for the sake of the people as well as for the sake of the industries. But altcoins, I don't think they have a way out. I don't think Ethereum just has the strength. It tried many times in the past couple of months. It tried to go over 2800, but it's failed. The only time that it actually did cross 2800, when I was very optimistic and I said that, okay, now this might be the time when we're getting back. The CPI data, the jobs data was very good in the US. Then this happened in the Middle East, and it was shot back to what, 2500, and right now I think it even below 2500 since yesterday. So I don't think Ethereum has the brute strength to go over 3000 right now. It just does not. And if Ethereum does not, then probably Solana does not. And if Solana does not, then two of the major ecosystems and all the other altcoins that are made on these ecosystems, they really suffer. So I think they'll definitely, it has to be a macro event that will trigger this. Otherwise, there's no brute strength left in altcoins. For
I mean, yeah, because talking about alts, there's no point sugarcoating it. They're bleeding. That's true, and it makes sense because, like we mentioned, the rates are high, risk appetite is low, macro uncertainty is everywhere. But at the same time, if you look at how things have been going, and like we have seen this before, we've seen all of this before. It goes down, and then BTC grinds higher, but this time it's kind of different because Bitcoin has stayed up strong. And if I was looking at the Bitcoin dominance for the last few months, and it hasn't gone down a bit. And I don't know how does the alt season even start if the Bitcoin dominance does not go down, or maybe it still stays somewhere in the middle and the alts pump along with it after the rate cuts or something like that. Because I don't see Bitcoin dominance going down into 30% again, ever again. Do you see that? Because it's very tough, because with all the institutional backings, the Bitcoin strategic reserves and all, Bitcoin is up there. If the altcoins have to follow, it has to be something different this time for the very first time, I feel so. Yeah,
I think,
yeah,
yeah, sorry.
yeah, go.
I think one thing that we can completely forget about is the mythical flippening that was discussed many a times in the previous cycles. I think people who've joined this industry in after 2023, if someone tells them that there was a theoretical concept called the flippening, where Ethereum's market cap was going to flip the market cap of Bitcoin, they'll be probably laughing their ass off. Because again, let's be honest, that is not going to happen, not in my lifetime, probably. So when you talk about Bitcoin's dominance, I think I agree with you. I don't see it going down. But if for altcoins to get up, it's not about Bitcoin's dominance. It's about the total market cap, right? If the let's assume Bitcoin's dominance is 30%, right? And the total market cap is 3.2 trillion. So okay, that gives whatever number to the altcoins. I'm not going to do the math right now, but if the dominance stays at 30%, but the market cap goes to 4 trillion, we immediately have a lot of money in altcoins as well. So I think the old concept that we had, that okay, Bitcoin, then Ethereum, then the rest of them, that money trickles down from Bitcoin to Ethereum to the altcoins. I think we'll see a change in that. Obviously, that will happen when there's a higher risk appetite in the market. That will happen, but I don't think Bitcoin's gonna drop, let us say, from 110K to 100K, and we'll see Ethereum getting from 2.5K to 4 or 5K in the same time zone. because of the trickling down. I don't think that will happen. I think Bitcoin's dominance will give strength to Ethereum, and which will give strength to the rest of the alts. But that will have to be by increasing the market cap of the entire industry, and not by the trickling down of the resources that Bitcoin currently is pulling in.
Yeah, I mean, everyone in Bitcoin at this point are pretty secure, and they're not afraid of it going down to zero again. So that's a good thing again. And yeah, Ethereum has been a proper stable coin for the last 4 years. I remember back in 2021, it was 24, 2500, 22, it was 24, 25. It's still 2500. So that's good. And yeah, I feel that's more or less that I had on my side to share here, because the oil threat, oil actually remains the biggest threat at this point. And how well Bitcoin is holding up. I mean, 103K is not bad if you talk to me, but then yeah, the short term, it should have stayed around 106K. That goes along, but like psychologically, if it's over 100K, I don't care. So it's like that. So
Yeah, I think when we talked to the professor, if you remember, he was a guest. Uh,
yeah.
I think it was a couple of months ago, 1.5, 2 months ago,
Mm.
and Bitcoin was sub 80K, was it back
Yeah.
then? And
He's talking about
we,
it going to 55K. Yeah.
yeah, we were scared of it going to 55K. So 103K, not bad at all. Seriously, not bad at all. But I feel there's no retail still, and there's no hype still, and there's no one talking to me about Bitcoin or crypto in the real world if they are not from the crypto industry. So I think the potential is still there. If we are at 103K and there's no one talking about Bitcoin, then just imagine where will the industry go if people start talking about it.
That's true. I mean, Bitcoin and Ethereum, both of them, I feel have held up strong against the whole geopolitical hedge, and the Fed, pivot play. Uh, that's true. Alts are bleeding, but they could possibly catch up. If the September rate cuts happen, and let's see. So I think that's all. And me and Sahil will be tracking all of this week by week. We'll be back breaking it down for you guys. So if you are watching this, drop a comment like, will we actually get the September cut? And does this war actually escalate? And when does crypto really catch the fire again? So hit like, subscribe, and we'll see you in the next one. So